All right, well, we'll get started in just a few minutes here. Welcome everybody to Stock Analysis Fridays. Hopefully you can see the screen and hear me okay. All right, so let's give it a couple minutes and then we'll get started. Okay, testing. Let's see if we got the voice working here. Testing. All right, well, welcome to Stock Analysis Fridays, everybody. My name is Bennett McDowell with TradersCoach.com. All right, so this is an event where you can actually type in symbols. We look at stocks and ETFs primarily. And the idea behind this is I'll give you a second opinion. You know, I use a very sophisticated set of software tools that we offer at TradersCoach.com. And then, so I analyze the markets using technical analysis with those tools. Also, too, the other great thing about this session is it really turned into almost like a stock picking service, because everybody brings a few stocks, we look at them, and you know what? You'll probably walk away with a couple you didn't know about and good possible trades. So we're going to take a look at what you have. I got a few I'm going to share with you. And so let's get going. All right. First thing I got to do, of course, is a few administrational items. I always have to tell you about the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really go hand in hand. But you need to be aware of the risk. It is possible to lose some or all your money trading the financial markets. That's why you always want to use money you can afford to risk, called risk capital. And that's whether you're doing investments or any type of financial transactions. Always use risk capital. The other thing, too, is check with your money manager or financial advisor. Maybe it's your accountant, maybe it's your lawyer, to be sure that any of the trading concepts we discuss here, or even if we recommend stocks here or ETFs, make sure All right, they're suitable for you. We don't know your personal situation, they do. So run these ideas, but really buy them, of course, before actually taking them. And then finally, we want you to understand that there is a risk control process you want to use when you take a trade. You want to calculate your trade size, which is also known in the industry as your position size. And also, too, make sure you know your risk to reward when you take a trade. And we have a lot of books that can help you not only with money management, but with all aspects of your trading. And one of the book I highly recommend if you want to really implement a very sound money management situation into your trading is the Money Management for Traders book. It's a new book I came out with this year. It's second to the right, and it's in that green bordered area called Money Management for Traders. And it's a fairly quick read because what I've done is basically stripped out all the important elements that is in my more comprehensive book called The Trader's Money Management System on the far left, and put that in an easy to implement book. And that's what it's all about. So it's kind of like a cliff notes of my more in detailed book. Now, if you want a deeper dive, hey, the other book is great too, but this book will get you started. The other thing I'm really happy about is that we're coming out with a new book on the art of trading. My publisher at Wiley asked me to come up with a new edition because, you know, the old book is, I think, dated like, what, 2008 now. So this new book is coming out next year, probably, I would say by summer. And you can pre-order it. All right, I'll put links up on the recording area after we're done here. Or you can just go to our website and order it under books. But it is available now. It's going to be a great book. It talks about what it takes to be successful in the business, and talks about our trading software tools as well, because we've come out with a lot of new ones since the old book. And then, as you know, I'm a big Elliott Wave person, so we have that book available. And then the Survival Guide for Traders is basically how to run your trading business just like a professional hedge fund right from your home with today's technology. So those books are available. Check them out at Amazon. Now, when we look at charts today, we're going to be using our software tools. These are tools I've developed over the last 30 years of trading the financial markets. So it's been a while, and I've come up with a really good program in terms of software tools. So we've got charting software, we've got scanners, and we've got risk control software. You always have to trade with good risk control when trading the markets. So you want to always make sure that you have those included in your trading program. That's why we call this the ultimate trading system, because we kind of cover all the bases. We find your stocks with our scanners, we do the timing with our charting software, and then of course we do the risk control with our risk control software. All right, so the success of a channel like this is always how many people we get here, right? More people we get here, the more stocks we can look up. And I don't mind staying as long as it takes to go through these. So bring a friend, whoever you want, and make sure they come with a couple stocks though. And let's check them out, all right? And then finally, thank you for attending. Don't forget to like us as well. I guess that kind of helps on the YouTube channel calculations that they do, so to speak. All right, couple I want to cover here. You can go ahead and start typing in things and type in the symbols, not the name of the stock. Okay, that is helps me because then I don't have to look them up. All right, so first what I want to do is gold. You know, we recommended this now for about a month, and it's done really, really well. The only thing I have here, it's still the target on this is 201. So I'm looking for a target up here. Now, before I dive in here, let me just tell you my layout here of charts. So I've got 3 charts, and you can see them in front of you, but they all have the same symbol. In this case, I'm looking at the ETF called GLD. And this chart on the far left is a 60-minute chart, represents the short-term aspect or look at this market. The chart in the middle is our daily chart. This represents the intermediate chart. And the chart on our far right is a long-term aspect of it, and that's the weekly chart. So when we say 60 minutes, what does that mean? Well, it means that each price bar on that particular chart on the far left, for example, is an hour long. All right. If we look at the chart in the center, that's called a daily chart. The price bar is a day long. So each price bar represents a full day. And then on the chart on the far right, when we say it's a weekly chart, it means that every price bar represents a full week or 5 trading days. So this way we get a long-term look, intermediate look, and a short-term look. And it's called multiple time frame analysis. And then we apply our software tools on each time frame. And then finally, this nice rainbow colored area at the top here. All right, these are all our scanners at work. All right, so we've got a bunch of those. I won't go into those. We probably won't use those today because we're just going to be looking up ones you want to use, but we do use those to find markets we want to trade. All right, so back to gold here for a minute. So I like gold. I still like it. The problem is with it now, it's run up quite a bit. All right, so for example, prices are around $166.53 now. And, you know, in order to survive any type of dramatic pullback, which is very possible because we're kind of due for one here, doesn't mean we're going to go below the bottom, but we're due for a pullback. You have to have your stop pretty low. All right, so we're getting pretty far away in terms of what makes sense to actually have a decent trade size or position size. So you may want to use an option on this, okay? Simply, as you know, there's many different types of option plays you can use. We use a piece of software called Options Play to calculate all our option positions. It's great software. If you go to our website and log into the customer portal for our clients, you can order it there at a discount. So definitely check that out. But you could do a simple buy a call here. If you want to do something more esoteric, like a more of like a debit or a credit spread that involves more than one option, you could do that. All right, the option play will tell you the best ones to get. But in any case, the nice thing about doing an option here is as long as you don't exceed a 2% risk on the trade, you're good to go. So if you had like a $100,000 account and you didn't want to risk more than, let's say, $2,000, then you buy $2,000 of a call option, and no matter what happens, that's the most you can lose, and that's 2% of your account size. So you don't, and then you don't have to worry about a stop. So that's possible. So I'm very bullish on gold. My problem is this is due for a pullback, and you kind of can see maybe we're getting close to that here. Notice the bearish divergence on our short-term time frame. So I wouldn't be surprised if we come back into the 160 range. So if you even wanted to wait until that happens, you could do that to issue a buy. So it's coming. All right, may go a little higher first, but I don't think so. I think we're going to get that pullback sooner rather than later. All right, USO. Let's see what's happening with the ETF on oil. You know, oil's all over the place, and it certainly had popped down. And we had thought there was a bottom possibly here, but not the case. It went back down. And on the weekly chart over here, you can see that if you're an Elliott wave person now, you're going to like this. But if you're an Elliott wave person, here's your wave 3, here's your 4, and we're probably going to climb out of this and eventually make a new high to wave 5 next year. All right, probably not going to happen tomorrow, but it should happen next year. And I have no idea the course of events that will, of course, cause that. But this is, you know, technical analysis at its best. So we think we're kind of close to a bottom here. We're thinking about initiating another long trade, but we got to wait for this indicator that I designed to turn green. And that indicator is called the Optima Wave Locator. And it measures momentum, and we don't take a long trade unless it's green on the short time frame and the intermediate. We do take it if we want to get in early, even though the weekly chart may be bearish at that time in terms of the owl. All right, PTFs, which is under it here, are all yellow in the long terms, and this one here is bullish, so it looks like we're going to get some more of a climb up. So I anticipate this going higher probably in the next couple weeks. Pulling back a little bit right now, but let's see if that bottom holds, and if it does, we could be initiating another buy on that, and we'll try it again. All right, so for right now, let's wait on that and kind of hold off a little bit. All right, let's see what we got cooking out there. We got Amazon, AMZN on that one. And Eleanor, this is for you. Let's take a look at this. Now, when you give me a symbol to look up, tell me if you're long, short, or out of the market, okay? So I know if you're out of the market, you're kind of thinking about it, but if you're long, you know what's going on. All right, so Amazon is coming down, and it looks like basically it's not quite done yet. So here we are in the target zone, reaching for a new bottom. So again, 3, 4, and eventually 5 coming. But this is bearish. and you have active pyramids and you've had them for quite some time coming down. So we've got a little bit more lower lows coming. However, we may get a rebound a little bit up into this area here before the next shoe falls. So I wouldn't buy here. I guess if you're long, you didn't get out earlier and you're kind of stuck with this. So if it's an investment, probably could just hold it. I think it'll turn around, but it is going lower. So this is a classic thing that if we were using our system, you would have been out a long time ago. But if you're just winging it and you're still in, then you're kind of stuck in a position that's selling off and you got to sweat it out a little bit. So no buy yet. We'll take a look at it next week, Eleanor, if you'd like, for a possible buy, but I think we got to give it a little more time. Okay. All right. So let's see what else we got here. Netflix. Yes. Good old Netflix. Take a look. All right. So like we had said last week, we're coming up to this target zone here. We're almost there. Okay. We're kind of been coming up here since April. And just so you know, the way in which we draw our fibs is a little different than what is taught on Google or on most channels out there. And basically when we do it our way, this little target zone here, all right, is where we think prices are going. And it has about a 70% accuracy rate that if this is a wave 4 type of correction, 70% of the time they get into that boxed area between the two blue lines. Now, 15% of the time they do fail. All right, so that is always possible. And they end up in the red area. So we're already in the red area. Okay, so we got to take note of that. So is wave 4 over? Could be, and I say that with about a 15% certainty. It's also possible to go a little higher, 15% of the time. But if you know about Elliott wave, you cannot go into the top of wave 1, whether it's a bullish or bearish trend. All right, so what do I think is going on with this one? Well, you don't want to be long here, okay, because you don't have much profit target left. You're so close to the target. And we may have reached the top of wave 4, all right? We have bearishness. This is not red yet. So we got to wait for a red. But if that turns red, I would go ahead and short that. Now, here's another one, great candidate for a put option. All right, we're at 291 bucks, expensive. So you can do a put and then not worry about a stop as long as you have your risk calculated in the option at 2%. So you don't want to lose any more than 2% on any one play, including an option play. But the nice thing about the option is if it makes one more high and decides to go in, all right, you can hang with that option and just let it unwind. So I would make sure you get the option at least about 6 months out on these things, okay? Because you got to give these things time to unwind. But I wouldn't do it yet, all right? Wait until you get a red owl on the daily chart. All right, so that is Amazon. That is Netflix. All right, Stuart, how you doing, Stuart? STNE. Let's see what we got here for this bad boy. Ooh, I kind of like this one. Stuart, I think you know what I like, right? So what I like, let me just explain that in case people don't know what I like. I don't like to chase trends, okay? So I like to get in when the trend is emerging. And the only way to do that is look for stocks that have either topped or bottomed. So if they've topped, then I'm getting in early on the trend down. If they've bottomed, then I'm getting in early on the trend up. And so what's a bottom? Well, a bottom usually comes after a big move down, and then we get this sideways motion. Now, you have to be careful not to get stuck in here because look, if you had bought in here, you would have been in this thing almost all year with no profit because it just bounced around. So you got to be careful on how you want to play this. So looking at this, I go right to the 60-minute chart. We're still bearish, okay? Look at all the pyramid trading points. Now these triangles, what they're doing is they're looking at fractal high probability patterns in the market. And they take into account the momentum that went into forming those patterns. And so I pay attention to those and they're still pointing down. So they're still active to the downside. So the short-term chart says we're still coming down. Now, does that mean we're going to make a new bottom on this? May, all right? But all the indications on the short-term chart really are saying that we're just going to go down a little bit further, possibly here, not necessarily break below here. So I would not consider a buy on this, Stuart, until we get above the most significant high in this roly-poly market here. All right, so I would stay out of this. So let's take a look at this in terms of the data. And, you know, you got a high over here of what, 1214, let's see, 1263, that looks to be your high. So I would wait for it to get above $12.63 before I would consider this, even if this is green, okay? Because the problem is that you don't want to get stuck in this channel, because look at the owl, it oscillates during that. So you want to wait for the breakout. When the breakout comes, I think it's going to be a heck of a great opportunity. So I think everybody, including myself, I'm going to put this on a watch list, and let's keep an eye on it so we don't miss it. All right, but I think a pretty good size move to the upside is coming. Now notice on the weekly chart here, we've got blue pyramids. Can you see that? Let me enlarge that. Let's just take a look at those. Okay, there you can see them a little better, right? So these are what we call unconfirmed pyramid trading points or fractals in the market. And so they form during markets that are moving sideways or channeling. And notice we got four. We got 1, 2, 3, 4. We got 2 pointing down, 1 and 3, and 2 pointing up. All right, that's the indication of an extended channel. Now, if the market breaks above this, the ones pointing down will go away, and the ones pointing up will turn green and initiating a buy. And that's how the art system works. But for right now, you see you still have an active pyramid to the downside. All right, so kind of you got to wait for this one. All right. So, but a good one to look. Okay. All right. Again, type in caps for me, Ral. I think that's GERM you want to look at. GERM. Okay, I think that is what you want. All right. So here's another one that's come down quite a bit, a little more visible on the daily chart. Okay. The weekly chart has a little bit less number of price bars per given time than the lower time frames. Couple things right away. Look at this 60-minute chart. What do you see on there? Look at all these little like dots. See that? That indicates low liquidity. That's another great thing about using multiple time frames with a lower time frame there, because you can see in a second without having to look at the liquidity what the liquidity is, and it's low. All right, so right away you see that you kind of got to use limit orders, okay, instead of market orders. So for because of bad fills. Okay, so we got a red PTF on the center chart, which is the daily chart. We got a pyramid there. It's not active though; it has been stopped out. But we have possible bottoming here. We could get a move to the upside, but not yet. I would not take a long position as long as the PTF is red down here, because this has a 75% probability, right? Probability and being right. And basically it's saying that this low, all right, it will probably be taken out before it really starts to trend a great deal. So I would stay away with that for right now. Okay. And that is GERM, GERM. Okay. Adam, IBKR. All right, so you're waiting for a long on this bad boy. Let's take a look. Okay. So, yeah, you got to continue to wait. I mean, right away, look at the 60-minute chart, deep dive down. Okay, red, pyramids, could have traded nicely on the pyramids. And then this, you can see the pull down. So when you look at a short-term chart, this is kind of an interesting thing. When you look at a short-term chart, see this move down? This is amplified over here. That's what you're looking at there. And so it really gives you a look at the inside structure that you may not be able to see on the longer term chart. So you got a red owl here, red, all right, green here and yellow. Okay, so we're kind of in a pullback in an uptrend on a longer term aspect. At the very minimum, what I would do here, just to kind of get an idea of where possibly the retracement area could be, you're kind of in it now. So it should turn around, but it's not doing it yet. You still got some more time to the downside. So I would not do anything with this yet. I wouldn't go short because you're already in the target zone, and I wouldn't go long. I'd just leave it alone, unfortunately. All right, let's see what we got. Kumar's asking on STNE may hit 52-week low. That was Stewart's, right? STNE. Let's go back to that. Let me just see if this is the one we were looking at before. Yes. Okay. So not necessarily, let's see, 52 weeks. So we go back a year. I don't think it's not saying, we're not saying that this low is going to be taken out. We don't know. We don't have enough information for that. All right. All I can tell you is it's moving down here. And I see no red PTFs indicating that we're going to, where this, how low this is going to go. If we had a red PTF that got triggered here and it was red from here, then I'd say, yes, we're going to take out that low. But we don't have that. All right. And, it could come down, turn around and go right back up without taking out that 52-week low. But it is coming down. So you don't want to buy now. But the nice thing about this move down is you're going to probably find out if that bottom holds. And if it does and turns around, you kind of want to be a buyer at that point. Again, wait until it breaks out above the $12 before you do anything. Okay, so that is important. All right, let's see. OOMA. OOMA. All right, not sure. Okay, Raul, let me know if AM is a stock you want to look at. I don't know if you're saying I am long or AM because it's lowercase. So if you want me to look up AM, just type it in caps. All right, so here's OOMA. Let's see what we're cooking on that. All right, I see some green PTF, so that's a good sign. I also see a move off the bottom here. I see green here, green here. All right, red here. And you can see that we have red here. So this is suffering a pullback and still what appears to be a bullish move. So let's take a look and see. So it looks to me, you don't have a lot of history here, okay? You're only going back a little ways. So it looks to me like we should get above, according to this PTF, above 24. So about 25 bucks. So we're going to make new highs on this. So if you think this is a bottom, all right, you might have been long already, okay? But here's an example of how you have to put your stop very far away, especially after, a breakout. And notice that this bottom, I believe, held here by barely. So this is a good place to put your stop. But if you're not in it yet, all right, wait, okay? Wait until these turn green. And that'll be, you'll see a pull up. You can use that as a bottom at that point. So I'd hold off a little bit. Again, if you wanted to use an option, you could, but for right now, don't do it until the owls turn green because look, we got an active pyramid on the 60 and we're still moving down. All right. Temporary, according to the PTF, it's temporary because it should move back up. But if this thing takes a real deep dive, this PTF could turn red. And at that particular point, that would be one of the 25% times it's wrong. So you got to be careful not to just jump in until the actual price changes, which is represented by momentum changing as well. And you'll see that in the owl and in the price. So kind of important. All right, AM stock. Thank you, Raul. Let's take a look at that. And you are long on this bad boy. All right, very messy stock. All right, I see something like that, and I know I cannot trade it on a daily time frame. I mean, look at it. All right, I'd have to drop down to either a very low time frame or a very high time frame and take that noise out, or through the lower time frame, trade these little minor swings. Okay, otherwise, where are you going to put your stop on them? What a mess. All right, so don't do a position trade based on the daily. Now, if we go to the smaller time frames, it's still a little jumpy. So you got to give this baby some pretty good average true range stops on this. All right, so back it off by a few pyramids on this one. So the question is, you're long now. My concern with this is the red PTF. So what you've had on the weekly chart, I'm afraid we've had here, okay, and this is where having the tools, the right tools come into play, is we're in the target for a retracement only, Okay, this is not the beginning of a new trend. So I'm afraid we might be heading down from here. Now, it doesn't mean it can't temporarily go a little bit higher into the target up here, but ultimately this should end not well. Okay, it should come back down here. So I don't know where you got long, but if you have some significant profits, I'd keep that stop pretty tight. Okay, that's kind of what I would recommend for that. All right. All right, let's look at AMD here. And this one is for Paul. All right, so nice, clear weekly chart. I'm just going to open this up. All right. So a couple things to this is a great one to look at. So you remember on that STNE stock that Stuart shared with us. All right, notice, we kind of have a very similar range bound market on that stock. And then look what happens when it breaks out. Stocks trend about 35% of the time. So most of the time they're kind of, range bound or a little bit messy. And so you don't want to be in those if you're a momentum trader when they're messy. You want to be in them when they trend. Okay, so you keep the powder dry until you need to pull the trigger, right? So on this case here, all right, beautiful wave 3, all right? I love charts when this clear. I talk about this in my Elliott Wave book. Clarity is very important when you're doing your analysis, because if you have clarity, you have a better roadmap of where you are. So this is a 3, looks like a 4 here, still within the wave 4 guidelines, and this is your 5. So ultimately, I think prices are going to go up here, and that's 179 to 245. All right. So, and look, the PTF backs that up as well. So when you have the PTF and the Elliott wave both in sync, that's a good thing. Now, the PTF's not going to tell you, all right, when that's going to happen, and it's not going to tell you the pullback that you're going to have to endure before that happens. It's not designed to do that. What it does is it takes a look at the momentum at peaks or even bottoms and tells, based on what created that peak, it gives a probability analysis on whether the strength of that peak usually results in a return of a higher high or a higher low if it's going down. And so that's the way it works. But it doesn't tell you when, and it doesn't tell you the pullback that could occur after that peak has been achieved. All right, so that's what we're in now, the pullback. And notice we're in the target. So anytime this thing, if this bottom holds and we get a resurgence, bing, pull the trigger. All right, that's going to be a great trade. And it's expensive. It's not expensive now, okay? So you could either do the underlying asset or do an option. Just make sure if you do eventually pull the trigger, it's going to take a while to get up there. Make it almost like a leap, okay? So a couple things. This would have to turn green before we could really say with any probability that you have a wave 5. Wave 3s are always, bullish wave 3s are always the highest owl, okay? And the system will tell you when that happens. The bearish wave 4s always have to be red. And then the bullish ones result in another green owl with bearish divergence when you get to the target. So the owl, for that to be a wave 5, cannot go above wave 3. And if it does, then it becomes the new wave 3. All right, so this is very, very clear. I like it. All right, let me draw this a little more accurate down here. Sorry about that. So that's actually 159 to 224, and the PTF target is that top right smack in the thing. So I like it. So now, do we go in or do we have to wait? We have to wait. All right, and this is where multiple time frame analysis shines. All right, if you were just looking at the weekly chart, all right, you kind of wouldn't have as much information as I have with 3 charts. Look at this, boom, coming down, red, PTF, red. This pullback is not done yet. So we have to see if this bottom is going to hold. We also have a sliver, brand new red owl histogram bar just forming. So I would put this on a watch list because I really like the potential here for a long trade. But let's see, let's let it pull back as much as it wants. The more it pulls back, the better. All right. And let's see if that bottom holds or it creates a new bottom. In any case, the nice thing about not being long is we have the luxury to just look at it and then decide when we want to pull the trigger. Okay. So really good one. Like it. All right. GERN for Raul. How are you doing, Raul? All right, so let's see what we got here cooking here, and you are long. Okay, so let's let all those time frames load here. All right, so first thing I do when I look at this, we've had the breakout here. This is kind of nice, isn't it? So you did have a breakout. You had a lot of mess down here, and then you had a breakout. That's pretty good. My only concern here is we got a little bit of a pyramid downside, but this is green. Okay, so it's kind of a little messy a little bit. We'll see what happens with that. All right, now notice here, back here, we had a green PTF earlier, and then that rebounded up, took the high out, which turned it back to neutral because the momentum at that time was not high enough to keep it that way. So let's see what we've got here. All right, I'm just going to take this little move here. And the first thing I want to do is, because we really want to see if it's done retracing. So I want to come down here, draw this up here. Perfect. Okay, that's a dot connected. It hit the target zone, one dot connected. And I can see an A, B, and then good, another low under that. You know, it's interesting when you look at these ABC corrections. All right, a lot of times they'll make one more low before they go. And that happened here. That's a good sign. So this may be a pretty good bottom. All right, now we got green here. We got a bullish pyramid here, nothing red here. So I'm kind of liking that. All right. I would put the stop as low as you can, maybe down here if possible. The reason why you don't want to use the pyramid base leg for the stop here is because if this thing comes down to an inflection point, which they normally do, you're going to get out. All right. You have to put your stop low. So I'm going to put this one, believe it or not, even though it's a cheapie. Okay. I'm going to put this on the buy list as one that is tradable. All right. And you don't need an option on this. It's so cheap. So they're probably not even, I don't even know if they have options on this one. Some of the cheaper stocks, they don't. But that's looking okay. And let's just take a look at what the target is. You know, I never like to go in unless I can kind of get an idea of where the thing is going. So target can be a fib extension. We have no PTFs really helping us at this time. So there's your target, 310 to 382. So I'll draw the Elliott waves in. And so if this bottom holds, all right, then this is your target. So this is one that I would say is a buy now. Okay. So you get, if I can figure out how to work this thing. All right. You get the clappers. Okay. So we like that one. Okay. Very, very good one. All right. So there you have it. Make sure you calculate your trade size. All right. So that is GERN as a go. All right. Let's take a look at SAVA. All right. So this one here, close, very similar to the other one. Now, here's what I like about this one. All right. Check out this, the PTF. Boom. All right. There's your 3. All right. So we had this as a 4, maybe 5. But here's the problem with that wave count. Let's open this baby up. The retracement is probably too deep to be a 4. Okay, look. All right, so what does that mean? Well, it might mean even something better. This may be just a 1, 2, and bingo for 3. Okay, so that's a possibility. So I don't think that's a 4. All right. This will always tell you whether it's the highest. The highest owl will always be a wave 3. And then if the retracement exceeds it, you got to know that that's going to be a wave 2. So I'm liking that on the weekly chart. Okay. Liking that on the weekly chart. I like it on the daily chart. Don't like it on the 60-minute. So unfortunately, I can't put this on a buy list until this short-term chart turns bullish because we got a red PTF and a red owl. So it's sliding down. That's all. Doesn't mean the trend is no good to the upside. It just means we're correcting. So the reason for multiple time frame analysis is to get you in at the best possible price. So if you can get in at a better price than $37.94, which is what it's trading at now, then why not wait a little bit, right? Okay, so that's the possibility. So let's see how low this goes. The other nice thing about waiting is you can see if this bottom holds. You know, sometimes, you know, all big downtrends start as small ones. So you never really know when a small downtrend will turn into a big one. So wait for it to end. And then if this bottom holds, bingo. So let's put this one on a watch list. And, this is one that could be, ripe to go by Monday or something. And maybe by the end of the day, who knows? Depends how fast it moves down, because each one of these price bars represents an hour. I think probably next week, maybe. We'll see. All right. So I like it, but watch list because of that reason. All right. Let me keep going. UA for Stuart. I think that's Stuart. UA. All right. Okay. So let's let this one load up and see what we got. All right. So, very nice. All right. So weekly chart, not a lot of data on here, right? Okay, believe it or not, going back to 2017 on a weekly chart is not a lot of data. So kind of a roly-poly one, right? Up, made another bottom, and look at this, made another bottom here. All right, double bottom maybe? Possible. All right, almost green, good sign. Little red, no red PTF there, no red PTF there, green here, good. Green, all right, here. So look, you had a green situation here before. So it would have been okay to go long on this earlier, because this would have been green, this would have been green, and you got the pyramid. So there's no question that this would have been one you would have been long in already. But what about now? What if you're showing up now? Well, if you're showing up now, I would wait for this to turn green, and it will do that pretty soon. Okay, maybe we got a little bottom here, it's come back up. Maybe not. Maybe it'll go up a little bit and come back down and then go. The other problem with this one here is we have not had a big retracement yet. All right, so that bottom's under $6 and we're at 888. That's a long way. Now notice the pyramid's doing a really good job on wave 1. So if this is 1, then this could be 2. The pyramids are designed to trade the individual waves. They aren't designed to trade the entire Elliott wave. So for example, if you have an impulsive wave, the pyramids are going to try to get you in early and get you out before the impulsive wave ends. But if you're trying to get to wave 5, that means you're going to get taken out after wave 1 and wave 3, unless, okay, your intentions are to stay in for the entire wave 5 move. Then you got to put your stop under here. All right. So that's the dilemma here. It's already kind of pulled up a lot and you got a red. So what do you do in a case like this? Okay, options, all right, are a good way of doing it. Therefore, you don't have to worry about the stop, just worry about the risk. And you can limit that risk by the amount of the option you buy. If you buy a simple call option like we talked about before. All right, so I like this one. I'm going to not recommend it right now. I'm going to put it on the watch list because of the red owl on the 60-second. But again, that could resolve itself very shortly, like next week. So I'm kind of liking this. All right. Now, where's it going is the next question. Where's the target? That's a little bit tougher to figure out. I'm going to be a devil's advocate. Okay. If we have a double bottom here, then this thing could just take off. It could. However, that wouldn't be very prudent to assume that necessarily. So what I would do is I would assume that maybe this will be just a normal fib retracement and the target needs to be there. So you kind of would like a pullback to give you a little bit more distance to that target, because if you put the stop way down here, your risk to reward is not 2 to 1. At best, it's like a 0.5 to 1, right? So unfortunately, that's no go, but let's see if it pulls back some more. If you're in it already, stay in it. Just have your stop far away. Okay, and that's the way I would do it. All right, so that is UA. Okay, Tesla. Oh, let's take a look at Tesla. That's always a fun one to look at. Kumar, always have time for you. Okay, Kumar says if time permits. Absolutely. All right, so Tesla, here's a great example of where using multiple time frame analysis would save your butt. Okay, so we hit the target zone. Anybody that just buys when stocks are in the target zone, all right, they're really doing themselves an injustice, because you don't know if you're done going down. Okay, just because you hit like the upper tier of a target zone doesn't mean it can't go back in, and now we're at the lower tier. So we're at the area where 15% of the time wave 4s get extended. Now, if this baby crashes and goes all the way down below wave 1 here, then this is a wave 2. Okay. All right. So, there you have it. Let's take a look at the shorter time frames. Bearish, 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 bearish. Would you buy into this? No. And this technically is still bearish kind of too. So you got to wait for a turnaround. All right. You'll get one probably, but it's not time. Okay. So don't go into that. Again, multiple time frame analysis gives you that little extra view inside what's going on. All right. So good. All right. WRAP. Let's see what we got clicking there here. All right, so kind of getting a little move up. All right, a couple things here. One is we finally got the owl turning green here. That's a good sign. Let me just see if I look at some more. Oh, there's not much activity here. So we made a new low, almost too much of a new low. All right, but it's still in business, so that's a good sign. All right, so we moved up off there. It's a cheapie. All right. So, here is your situation as where is this baby going? All right. Is it, going to make all-time new highs? Can't really say that. Best we can do is maybe draw that fib retracement area in here. And I have to be honest with you, this is kind of a tough draw. I think you got to put it there. So you're kind of getting kind of close there. Okay. You still got some room. You got a green PTF here. So looks like it's going to go back up. I would wait until this thing moves down a little bit. So, all right, here's that big move up and you haven't gotten the big retracement. You may be getting it now. So we got to wait until that ends. And we need this to turn around and be green. We need this to stay green. And then we can pull the trigger if the risk to reward to the target zone, I think it might be, could be 2-to-1. Okay, so we kind of got to wait on that. So 2-to-1 risk to reward is always based off the profit potential versus the distance from the entry to the exit in terms of your risk. All right, so there is that. So no go on this yet. Too much of a bearish owl on the 60-minute chart, but things could change. Okay. So again, Raul, I know you're long on this. Just make sure you have your stop at the bottom. Okay, that's the best you can do here. I'm not saying necessarily get out because, there was a place to get in here, right? This was green and this was green. So getting in was not a bad decision, but now this is where stop loss placement is everything. Okay. All right. So that's the kind of deal with that. All right. Let's see what else. Oh, on the crypto market, GBTC exchanges are all a mess here, but in any case, don't touch this right now. Okay. This is going to take a little while to resolve, but I personally don't think Bitcoin is an industry that is going away. I think it is more like an industry of the dot-coms back in the 1990s, where it went through a manic buy, which is what we've seen already, and then an implosion, and then the survivors prosper. And I think you're going to see that in the cryptos. All right. But it's too early to do anything, but I'm not writing them off. Okay. That kind of thing. All right. Silver. Let's take a look at silver. And silver is one here that seems to be popping up, but that red PTF on the daily chart's keeping me from doing anything with it, unfortunately. Okay. So maybe during the next pullback, we'll see what happens with that. But for right now, no go on that. All right. Anything else? Let's see. Let me drop down. Let's take a look and see what the M&Q is doing on a day trading time frame. This is always kind of fun, right? So, we run a day trading room, so I'm constantly in there trading the micros. We do the micros a lot. So let's see what we got here. Okay, so here's a move. This is a 1-minute time frame. So again, once again, I'm using the let me get rid of this thing. I'm using the multiple time frame analysis, but I just changed the time frames. So this is 15 seconds, 1 minute, and 5 minutes. Now, for people that are not used to day trading, they may look at these time frames and faint. Okay, but actually, we wait sometimes 30 minutes for the right setup. So it's not as fast as you think. Sometimes it is, but not really what you think, okay? It's not that chaotic. So, because we're kind of very structured and we always use risk control. So we got a red PTF on the 15 seconds. So I'm not going to go long here, but we may have a long coming up, even though the market is selling off right now. You know, you have intraday moves down, and then you have a little relief, and then more move down possible, or maybe not. We take advantage of those intraday swings. All right, so let's take a look at the MES, see if it's any different. And this one here, same, okay? So you don't want to, maybe this one's different. Hold on. Okay, so this one's different. All right, so this one is showing a little bit more positive PTF here. So that's a good sign, indicating we should get above 3880. So we got red and red. I can't go long until those owls turn, but maybe we got a bottom here. What's interesting, it's almost like a triple bottom. So let's take a look at this and see where that low. I'm not sure, I don't know if this low will hold, but let's say it's 3866 and a quarter, 3865 and a quarter. All right, and 3864. So this is the lowest one right here. So let's see if that bottom holds. Okay, so let's wait it out. All right, it may or may not hold, and if it doesn't hold, that's actually better, because then it gets those gets that out of its system for one more low. Bullish divergence, you'll have a higher probability of going if that gets taken out. And likewise, if it holds, and you won't, okay, it just got taken out. See? All right, so that's a good thing. All right, so here's where the lower time frame, 15-second, with the red owl, bearish pyramids, along with the owl here, all right, save the day. Okay, for now. All right, when these change, we'll see. We'll see what happens with this. Now, we'll also see if this changes abruptly to red. Okay, and here too. If that's the case, we can't take a long until that's done. So MES, no go for a position now. If you just showed up, you may already be short. Let's take a look at crude oil. All right, we switched out to the February 23rd contract. Might switch it back. It's a little spotty on the 15-second. Basically, the commodities like crude and gold, for that matter, they're a little spotty anyway on the liquidity compared to the indexes. But this is usually crude oil is not as spotty as gold. So this is indicating bearishness. I would take a short position possibly here, okay? If this goes red and this goes red, you got two owls, both red, decent target. I'd probably put my stop here or maybe here, depending on it. But if those owls would have to go red first. And then finally, gold. All right, gold is looking more like a long position. We've run up a lot though, so maybe only one more high. And maybe at this particular point, let's just take a look and see. Yeah, kind of a little bit of a retracement in this area here. Let's just use this retracement for today. We hit that target zone, so probably due for the upside. So I probably would go long on this one if we get a green owl on both these lower time frames. You know, the 1 minute and also the 15-second. Spotty, see how spotty it is? Gold is kind of a funny contract because, you know, at the end of the day, they close it for a couple hours and then open it up at like 5 o'clock my time or something. So it's kind of a weird contract that way. All right, so you know, the MES is definitely in all the indexes. MES, you know, you also have the M2K, which is the Russell 2000. That's a very liquid market too. Okay, that's coming down. All the equities will kind of pair themselves to be fairly similar. Here's the Dow, E-mini. So the other thing is, you know, you can watch all these, but if you find a trade and you go into, let's say, the MES and the Dow, you have to be a little careful because you don't want to overdo it on that sector. Okay, so you do have to be careful of that. All right, so that's kind of it here. All right, let's go back and take a look and see if there's any more of our regulars to take a look at, our position trades. So now I switch back to a 60-minute chart, a daily chart, and a weekly chart. And Raul says, how about XNET? Take a look here. Ooh, this is looking nice too. Ooh, I'm liking this one a lot. Okay, very, very good. Would have been nice to gotten in this one earlier, okay? But here you go. Well, you like the cheapies, huh? XNET, XNET. I'll put that as a buy, but here is the thing. All right, where are you going to put your stop? You got to put it down here. All right, maybe I'll let you get away with putting it here instead of here, but it's got to go low because you're going to get a pullback, right? Now, the problem with that is, look at this. It's at $2. We're talking about a stop down at $1. That's 100% away. All right, your trade size is going to be so small that, is it worth it? That type of thing. Are you going to get any trade size? Your potential top based on the weekly chart is way the heck up here. All right, but you'd probably be happy if you made it halfway to 6, right? So here's the thing. All right, do you have the risk to reward? Let's say you put your stop here at the bottom and your target is here. The answer is yes. Here's your risk and here's your reward. Okay, how many of those are there in there? 1, 2, 3, 4, 5, 6? So you're 6 to 1, probably even higher than that. I have a risk to reward calculator, which is software that'll tell me exactly, but that's worth the trade. But you got to put the stop at the bottom. And so that is going to be the only issue. Now, if you wanted to wait for a pullback, you'll probably get one. So you could do that. But I'll put this as a buy. Okay, I'll put that as a buy now. For those of you that can stomach putting that stop way at the bottom there. All right. Okay, it just broke the market when looking at it. Hope not. All right. Zeke said that. Let's see. Okay. I think I went through them all. I think that's it. I think I did wrap, right? Let me know if I missed any. Okay. But I think that is kind of it. Good session today. Great to have everybody here. Great to have everybody here. And of course, we wish you the happiest of holiday seasons. We'll have the recording. Oh, one more thing. On the recording, what we do is we put a timeline up there. So all the stocks that we looked at today, if you open up the description, you'll see the timeline. You can just click on the stock and it will take you right to it. So you don't have to watch the whole video if you want to go back and review it. It's kind of a cool feature. I think, Stuart, you taught me how to do that because he was saying you can do that. So we started doing that months ago, and it's just great. A lot of positive feedback on that. All right, so Gene is asking, what are the winners? All right, so we have GERN. Okay, this was one breaking out here. Okay, so we got one that the target here is 3 to 382. They're all cheapies, I think. XNET was the one we just looked at. So you got to make sure you have that target low enough on that, or the stop low enough on that, and use the weekly target. So you're going to be in this one a long time. This is not one you're going to be in for a week. This would be one that's going to take a year or so. All right, and is that it? Do I have any more? Wasn't there another one? Can't remember. All right, I don't have it written down if it is. I don't think. Yeah, it's not one. Okay. No, I think that's it. I think just 2 today. Oh, UA. Was it UA? All right, let's take a look at UA. Let's take a look at UA and see. No, UA was not ready yet. And I'll tell you why. After the 60-minute loads, I think we have a red owl on the 60-minute. Okay, so let it pull back. Hopefully, you'll get a little bit better price on that. And XSW. Let's see how that one looks. Give that a second to load. This is the one where you had the low liquidity here. Okay. So I don't know. Did we look at this? I don't know if we looked at this one. I don't think we looked at it. Okay. Gene, XNET is XNET, not XNNET. I'm looking at the comments there. All right. All right. So I'm liking the weekly chart. I guess we looked at this probably last week, right? All right. So that is a great looking weekly chart. All right, here's your wave 3, 4. Okay, 1, 2, sorry, down here, 1, 2, 3. All right, so close to going into 5. Question is this a bottom here? Certainly could be. All right, let's see here. Yeah, it's looking pretty good. All right, the only thing is, for me, timing wise, I would just wait for this to turn green because we're kind of pulling back a little bit. So I would keep this one on a XSW list. Now, we did have a green here. Okay, so it's possible you could have gone long here, but you know, I don't think, yeah, I guess you could have gone up here. But again, then you've got to put your stop here. All right, so if you were watching this during the week, last week, then you could have gone long perhaps up in here because you would have had a green here and a green here. But for right now, if you're just showing up, wait for this to turn green again because it's pulling back. All right, stop has got to be here. Okay, it's got to be at the very bottom. You want that stop when you're getting in early. You want those stops at the very bottom because you don't want to get stopped out on pullbacks, you know, or volatility. You want to only get stopped out if that is not the bottom. And then you can reset and try again. Okay, so that's that one. So let's look at it next week. Okay, keep that on a watch list. Again, you may have been in it last week because it was green owls last week at some time, but not now, or earlier this week, I should say, like yesterday. Okay, all right. So okay, so there we have it. So if you're in it, you're okay. Just put your stop at the very bottom. Well, listen, thank you very much, everybody, for coming. I guess we're going up over close to, how long have we been on here? About an hour, I guess. So thanks for coming. A great turnout today. We'll see you back here next week. All right, so have a good one. And I guess what I'll do is let me just run it over here for a few minutes. I'll put a little music on. You can see these equities are still taking a dive down here. I'll put it on the MES. All right, Pyramids did a good job on these, but it's still going down. And let's see if that PTF abruptly turns to red, because if that does, that shows we've got some serious bearishness coming in short term on the swing down. So, and don't forget, these are very short time frames, so things can change. Market's down about 460 points plus some change. All right, so we'll see. But anyway, when this comes to a bottom, that might not be a bad place to take a long trade. And we're getting close. Let me just take a look here and just see how this is coming here along here. Let's do a little fib extension. And problem is this is 3. This is not, this is where wave 3 probably should end. All right, so we're going to have to kind of keep an eye on that. So anyway, all right, so long trade coming up, but not quite yet. All right, we'll see. We'll see if this target zone holds, and then we'll wait for these owls to turn green. Okay, make sure there's no PTFs that are red. And then you could possibly take a long trade then. All right, so I'll leave it there. I'll put a little music on. You guys hang out just for a couple minutes, and then we'll close the room, and then we'll see you next week. Okay, thanks so much, everybody, for being here. And again, we appreciate you being here and sharing your stocks with us. All right, so take care. Have a good one. All right, everybody, we're going to get ready to close the room. Listen, on the MES, it's still going down. It's close to a bottom. I wouldn't go short. It's too late to do that now. We're getting bullish divergence here. So we may be getting close to a bottom, but it needs to unwind. Still got red here. Still got this red here. So you wait until it turns around and then you pull the trigger somewhere, hopefully right around in there. But for right now, it's still heading down. We may even have more lows, of course. So just let it unwind. Short position would have been great earlier today, but right now we're already in the target zone. So just hold off a little bit. All right, so that's it. We'll see you next week. Have a good one. Bye-bye.